All right. Hello, all of my good friends out there in XM Nation and all of my new friends out there in the world of social media. Welcome to all the YouTube viewers. Doug Rumor is my name. I am proud to be here on what we all know is Terrific Tuesday because every Tuesday is terrific. It's another day to make money. So let me just say welcome to everybody, all of our new viewers. It's always good to see you, although I physically cannot do that. I can hear you and I can feel your spirits behind me. Yes, I can. So, welcome to today's beginner room session where the title is Trading for a Living. And what this session is all about is learning the fundamental basics, not fundamentals as in stocks and assets, but the fundamental basics on what it takes to be a successful trader. What are the building blocks that someone needs to become successful? Now, when I say successful, I'm talking about over all types of markets. Could you make money in a bear market? Can you make money in choppy, sideways, non directional markets? Can you make money in bull markets? Well, most people can. But what we're trying to do is build consistent habits from the ground up that will make us great traders and making good decisions. And usually, when people come to these beginner rooms, they'll realize that a lot of the stuff that they have learned early on or the perceptions that they had for trading are inaccurate because it's a unique career. So I want to welcome everybody there. Feel free at any time to ask questions. The chat is open. That's what we're here for. We do these live webinars daily while the market's open. We have advanced rooms where we have debates between instructors. And then we have these basic sessions or beginner room sessions, we call them, where we learn those fundamentals and building blocks. And you can learn more about what it means to be a trader. So again, thanks for everybody. If you ever want to keep up with my solo sessions, I do quite a few of these a week in both advanced and both beginner rooms. Today, as I said, it's Terrific Tuesday. We're talking about trading for a living. Tomorrow, we'll be decoding charts, and then U.S. markets open on Thursdays. So what we want to talk about here today is building those successful blocks that someone needs. So for all of the newer traders out there, or those that are struggling, or whatever you're going through at this point, we want to start out first and foremost with having some sort of a strategy. Now, this is probably something I could discuss for 17,000 hours, right? a long time. But a strategy is something that you have to have not to keep yourself from guessing. Oh, by the way, I'm not AI. I know AI is all the craze out there in the world. I'm not AI. I'm not a robot. Uh, so I know that AI does some spectacular things, yes, here, but no, I'm not. I'm not AI, but thank you. So anyway, guys, what is a strategy? Well, a strategy is just something that keeps you from guessing. And there's going to be a million people out there in the world say, my strategy is best, this strategy is better, that strategy, this strategy, that strategy. I'm going to do all of you a favor. That doesn't matter that much. There are a million different ways to the top of this trading mountain. You can be a contrarian trader. You can be a breakout trader. You can make money in gold. You can make money in oil. You can make money in currencies. You can make money in stocks. You can make money in anything. Every single thing you can make money in. The thing you have to do is focus your attention and energy in one direction because there are too many things going on. And back to XM, this is what's so valuable, excuse me, about these sessions that we do here. And that is they've assembled a great group of a dozen different instructors with a dozen different backgrounds and a dozen different strategies, showing you that all can be successful. We just have different approaches. That way, no matter what you're looking to achieve as far as finding a mentor, you can get it right here at XM. And that's what's so powerful about it. We're all just sharing our strategies and how we approach markets. So remember, strategy is just to keep you from guessing. There's over 7,000 different types of stocks. You can't trade them all. You can't catch every single move in the markets. You don't have to be a great oil trader. You don't have to be a great currency trader. You can be whatever you want to be. You can make yourself whatever you want to be in this industry. But the strategy someone chooses is what fits their personality, what they understand, and it keeps them from generally just guessing. Now, another thing when it comes to those strategies themselves, we don't want to put too much emphasis on them and trying to make them perfect because the market itself is unique. It is not perfect. The markets are always going through certain kind of behaviors. They're always going through some sort of nuances back and forth. So we don't really want to focus too much on trying to find holy grails. We just want to try to find ways that we can get in at the good prices and exit at the good prices. Hey, welcome, Boyke. Nice to see you. The other thing we'll talk about later today as we go through there is managing your risk. As you trade markets, you'll learn that they never, ever, to some degree, really make sense. They do things that they shouldn't be doing. So, for example, like right now, markets shouldn't be so bullish. They shouldn't be so strong when you have these debt ceiling problems or when you have all of these other issues. But markets have never worked that way. And I think that's like when I said at the beginning of this conversation that markets are always kind of unique. They never make these senses. The perceptions that someone has about trading when they come in, they realize it's completely different. This brings us to market cycles. It's understanding that everything goes around this merry-go-round, right, Boyke? Around the wagon. Money just constantly circles the wagon. What is very strong and very hot today will become very cold and on the back burner tomorrow, and something else will be stronger. And think about that. If any of you have any market experience and you've been at least paying attention or somewhat aware of markets, right now, the whole theme across the world, as was mentioned, AI. Can you believe, Boyke, somebody thought I might be AI? AI. It's all about AI, artificial intelligence, and that's fueling the market. Everything outside of that is not really that exciting. It's not really getting the attention. Some of it's very, very bearish, in fact. So that's the direction that the market is in. Now, 6 to 7 months ago, that wasn't the case. We were not talking about AI. At the beginning of last year, we were not talking about AI. We were talking about cryptocurrencies, right? We were talking about other types of investments, not AI. And soon or one day in the future, this AI theme, it will still be there, but it will dampen. The enthusiasm will dampen. It will tire out and we'll move on to something else. Kind of like now we're switching into the debt ceiling. So the market always has this cloud above it that's fueling its moves. And because I only have limited time, and I know there's a lot of new people there, and you're getting a free glimpse of what we do, I just want to kind of talk about this real quick before we just go into the when the session becomes private. This is what you need to learn when it comes to being successful. First and foremost, these things that are on the screen. Because if you don't understand those, at least to a very minimal degree, everything that you ever try will end up becoming a failure at some point. Because, like, for example, your strategy, the strategy one uses has to change based on the market cycles. The risk that you choose to take matters based on the market cycle. What kind of cycle are we going through? Does it require risk right now? Is the market have an appetite for risk or not a risk? So what you want to do with your strategy is understand that it depends on how each one of these below are working. What's the market going through? And that's your theme right now is AI is the theme. It's strong, but it's been strong. Is there more room in that? Do we have more upside? What is that potential? So again, guys, that's what we teach here. That's what we're learning here. And that's what we're going to go through today. We're going to talk a little bit about these strategies. And I'm going to move over to some charts right now. Again, if you have any questions, guys, please bring them up. If this is your first time visiting us, again, welcome. So I'm going to take a glimpse here at the US 100, which is really leading the charge. Let's take a look at the daily chart. And you see that we've been in quite an uptrend here for the last 3 or 4 months. Again, AI is fueling a lot of this move, and that's important that we understand that. So when somebody sees something like this, the question always becomes, how much further can it go? How do you know when this is going to end? Will it ever end? What if it goes to all-time highs? Will there be a market crash? All of this stuff you see every day in the news. My suggestion with that, or what I like to teach in these beginner rooms, is the news actually, to most degree, is irrelevant. It means nothing because the news that you and I hear has already been enacted on by the higher ups, the Goldman Sachs, the hedge funds, the BlackRocks, the Citadels. They already know. They're the ones that are in charge of moving the markets. This is why often markets don't make sense because what we think is important isn't necessarily important to the markets themselves. So this is fueled by AI, uh, not me, this chart. And if we take a look at this, we have a couple of important spots where you'll find prices are fluctuating to the downside and to the upside. And it's a pretty simple read. This is a daily chart for anybody that's just kind of grasping charts. And again, on that note, the important part of charting and why all traders use charting is it's because charting tells you the truth about what's happening right now, not what a valuation is years from now, not what something is worth many years from now, but what are people willing to pay for right now? So every day when we get up, I've said this before, uh, you start right where we are. I got to squint to see this. I'm sorry. It's 13,863. 13,863 is the price of this. Now, to keep your strategies and everything that you do simple, this is what the market believes it's worth, right? You go someplace and you pay market price for something, like a lobster, right? Market price. This is what the market has set. 13,863 is fair market value for the NASDAQ 100, the US 100. The question is, as with every day, is do people find that expensive or do they find that cheap? How does the market review that? Now, this price means that everything that we are talking about right now today, meaning the war between Russia, Ukraine, supply chain problems still left over from COVID, inflation that's 5%, maybe 8, 9% in the United Kingdom, right? The value of the dollar, the value of the euro, the value of oil, the future of the world, AI technology, industrial technology, all of that stuff is already baked in. Debt ceiling baked in. That's what the market feels that everything in the world combined into one is worth today. So if this wants to move higher, then something has to show up to make the general market, this consensus and the herd, feel as if this is still a value, that there's still more, that it should be 15,000 or 16 or whatever, it should be higher. I mean, it's simple as that. So in order for something to go higher, somebody has to be willing to pay higher. I say this a lot as well. It's called a market for a reason. It's like every market, like a food market, a gas market, right? A flea market, whatever market. It's dictated price. Does somebody want to buy it? Real estate market. Does somebody want to pay more than 13,863? And the next part of that is, do they find that too expensive where the market itself has overestimated, has gotten too excited about all of this, has gotten too enthusiastic and is too far ahead of itself and it's too expensive and will come back down. Every day, we need to come up with those value adjustments when making trades because maybe today on Tuesday, it's not. The market might just be tired. It might be having an off day. It might just be going through the motions. And sometimes these things take several weeks to months to figure out if it's too high or if it's too low. Now you can see this today. You're just still kind of moving around 3 days in a row right here. This is a daily chart. So you had this very big, bold move and sort of 3 off days. Got one red, one green, one red. This is what charts tell us. It tells us that this was very strong, very enthusiastic, but since then, we haven't been able to find any new buyers. The reason the market is not moving higher is because we don't have enough buyers. We don't have enough people being the traders that are involved, the investors that are involved, right? the hedge funds. They've got to find a reason to justify 13,863, right? And there's no reason at this moment, right now, at this very second in time, right? Now that could change later. You never know when they're all of a sudden going to figure, oh, now we want to buy. That's always the interesting thing about markets. You never know when this is going to happen. But right now, it's showing you that there's no one interested. But on the same side of that, it's also telling you that no one is really ready to just give up either, right? They're not selling either. It's a small red, but it's just kind of bouncing back and forth. That's pretty simple, straightforward chart reading. You're not moving up or you're not moving down.